Okay, I believe we are ready to start. My name is Rafał Krzyżaniak. I'm a partner and managing director of Boston Consulting Group in Warsaw. I spent 13 years working with financial institutions in Poland across many topics, including technology, but also the capital markets. And today I was asked to present a brief introduction to the next panel about the key trends in stock market exchanges. So about the business of having an exchange itself. So first of all, let me tell you that if you're an exchange in any market, it's not an easy business at the moment. So first of all, exchanges compete with themselves for the listed companies, but also, and even more so, for the investors. But at the same time, they are also competing with new entrants. So the MTFs and other players are disrupting this market. The needs of the customers are changing rapidly. The technology is really disrupting this business. So across the globe, the exchanges are under heavy pressure. I even recently discussed with my colleague from Mexico City. He's actually also discussing the development of exchange on their own market. And also the key question was about the challenges, and they believe this market will be disrupted, and this core business of exchanges is coming under heavy pressure. So that's the context. And on top of that, obviously nowadays, in the short and medium term, we do expect to have relatively challenging macro environment. So not an easy market to be in at the moment. So who is winning at that market? What we see is who is winning is really the big guys. So really the biggest exchanges. When we compare the growth rates of different exchanges, we see that the local markets are really dragging behind the biggest players. So we see that the volume is really concentrating on the biggest market, and the trading is really migrating towards the hubs from the local players. And the same happens for the mutual funds. So the same happens for the asset managers. When we take a look at the biggest asset managers, they are not only biggest today, but also they grow the fastest. So we see that the capital market globally is concentrating at a higher and higher pace. So the question is, moving to our local market, how it looks in Poland. Before we concentrate on the Warsaw Stock Exchange itself, we took a look at the market, and I think we are facing many of the challenges that you are, as the industry, you are probably acutely aware. So the savings rates is not only low in Poland, and it's lower by order of magnitudes as compared to other markets, but also participation in the capital market in Poland is much lower than in other markets. And I think you are very aware of the reasons. We have fairly specific we underwent a number of reforms of the pension funds. Now I think we have some prospects for improvements, but a gradual one, I would call it. And then what we also see in our research is that the trust to the stock market in Poland is really disrupted, because we have long history of products that were not fair to the client. We have long history of very poor advisory practices. We don't have established advisory market, in fact, in Poland. This is a huge white spot. And this is the reason we believe, and this is really where we should focus, I believe, as an industry and institutions supporting this industry, to really rebuild this trust, to educate, not to use the word promote in the MiFID context, but this is, I believe, where we can really move the needle by a lot, rather than focus on who is getting the bigger part of a very small pie. We believe that the pie should be 10 times bigger, and this is where we should concentrate, in my view. And then when we take a look at the Warsaw Stock Exchange itself, one interesting picture, at the moment Warsaw Stock Exchange still has a very high share in trade of the local stock. We believe this will come under heavy pressure in upcoming years, but at the moment, as compared to other markets, Warsaw Stock Exchange has around 90% compared to about 50% for other markets. And so far, this we perceive as a big achievement, but as said, this will come under heavy pressure. On the flip side, if we take a look at the structure of the revenues of Warsaw Stock Exchange in terms of non-trade related revenues, these are one of the lowest globally. So Warsaw Stock Exchange is highly dependent on trade. When we compare it to London Stock Exchange, which is on the other extreme, you can see that on that dimension, the exchange is really lagging behind. London is a bit specific because London acquired Refinitiv for 30 billion, I believe, US, and they believe truly a data company. So now vast majority of revenues of London is from data services. But even other exchanges have more like 20 to 30% of revenues coming not from trade, but from other services. And we believe this is one of the dimensions where the exchange can be growing. And what it means, I will underline just three things, what it means to get revenue from sources other than the trading. Number one is the data. So the exchanges are really becoming the data companies, as exampled by the London Stock Exchange. And it's not only the trade-related data and financial data, but more and more also alternative data sources, even from satellite imaging or from analytics based on emotions of the board members presenting the financial results. And exchanges really become like these data hubs for the capital markets rather than just the trading place. Other area that I wanted to stress is corporate solutions. So I will give several examples, but nowadays exchanges are very active in terms of investor relationships, but also ESG consulting, for example. This is what I think the Warsaw Stock Exchange is also considering, but definitely we see it very strongly established already in some of the other markets. And then technology. As we very well know, NASDAQ, very big player in terms of technology, and exchanges can become this provider of tech for the capital markets. And just a few examples that I referred to during previous part of the presentation. So first of all, NASDAQ, one of the key initiatives is ESG consulting for the listed companies. The other one is the reporting hub for key ESG metrics that they are building at the moment. We believe that this is a huge trend at the moment, and some of the markets that don't provide proper transparency in terms of ESG in some time will be not investable for some of the key mutual funds that have high priority targets related to ESG. So we consider this absolute priority. London Stock Exchange, I already mentioned, in majority, that's a data company rather than trading company. Swiss Exchange recently invested in 14 ventures. We could debate if this is what should exchange do, but as far as this is related to the core and enhances the capabilities of the exchange at the core, we believe this is a viable strategy. Euronext is obviously a huge consolidator, but at the same time executed number of acquisitions in terms of technology. Tel Aviv, I don't dare to comment because we have Roy in the panel, so I think Roy will be much better person to introduce it. And Deutsche Börse, which pursued completely different strategy of focusing really on the derivatives and establish absolute leader in terms of derivatives trading. So number of examples just to show that exchanges are really under huge pressure in their core business. That's one takeaway I would like to leave you with. Number two, are diversifying into revenue sources other than trading. And by the way, those revenue sources also enhance trading, because if you have data, if you have insight in the market, if you have better analytics, that means this market is more vibrant and more attractive for the investors. So at the end of the day, it enhances the trading itself as well. And number three that I wanted to leave you with is this point I made earlier, that we should think about how to triple the pie rather than think how to split the pie that is relatively small. Thank you. With that, I think we will move into panel discussion.